All right, we are live. Hey, beautiful boss. Welcome tonight. We are talking about owning, renting versus investing. All right, so I'm excited about tonight because regardless of what path you take, you can still build a real estate portfolio. So if you're watching this live, put whatever questions that you have, whether that's owning, renting, or investing, put that down in the chat box. And if you are watching this as a replay, make sure you put hashtag replay so that I can come back, check you out, and answer your questions as well. All right, beautiful boss. So let's talk about it. Owning versus renting versus investing. Let me tell you, regardless of either one that you choose, you can really make a pivotal shift in your finances as well as building your wealth portfolio. Now, I do want to say this before I even start, okay? I know a lot of people watch the news and you hear about the rates going up and you hear about, rates being at 6 and 7%. The thing is, regardless, people are still buying houses. Regardless, people are still refinancing. And so even when the rates is low, if you didn't refinance then or purchase a house then, what was your excuse then? You got to take account for yourself and see where you are at right now and where you want to go. And so I hope tonight you're able to drill in and find out which one of these is going to be the best option for you to start building your wealth portfolio. All right, so we're going to start with owning. Now, with home ownership, there's a few things that I want to make sure I hit all these points because I don't want to leave none out. So I got my little notes right here, okay? So with owning, this is where essentially you own the property, right? You have the deed. If you go to the register of deeds of that county, it has your name or your business name on that property. You have ownership of that property, okay? And the thing about ownership, now I'm team advocate, do whatever you need to do for your situation, okay? But I understand the pros and cons of being a renter and an owner. What I love about home ownership is that there is a stake. Just like if you own a business, you own equity in that business. It's the same thing with a property. You own equity in that property. That means that you have the ability to refinance, sell, or even rent out that property, right? This allows for you to be able to really establish yourself and see what home ownership is, if that's something that you want to do. See what it is in terms of how you're able to benefit, right, from home ownership. The main thing that you're going to benefit from home ownership is going to be appreciation, which means when you purchase a property in an area and you see infrastructure getting built, okay, it's all about location, location, location. When you see things around where you have your property, prime property, or where you see a lot of individuals wanting to move to, you're going to see prices begin to rise, right? That's what you call appreciation, where your home done went from 300,000 to 350,000 in a year, right? So this appreciation, you're able to now have more equity in your home, which means that your home is worth more. Okay, so that equity is where your home is worth more, and you subtract it from your balance, and that equity begins to grow over time. That's appreciation. That's one thing, my friend, I love about home ownership. Okay, it's nothing like it. It's kind of like stocks, right? You in for the long term, and that appreciation is saying, I appreciate you for trusting in me. Now, keep in mind, not all areas appreciate the same, okay? So location, location, location is key. Now, there are a few ways that you can acquire property, okay? You can either use your own loan, right? So you come to me, a loan originator, and get a home loan. You can be able to inherit property, Or you can use unconventional ways like seller financing, paying full cash for a property. There's so many different programs. I'm not even about to go into the mortgage programs. It's so many that are available, from using your assets. If you're 1099, you can use your 1099s. You can use, let's say you have somebody that's living with you. You can use border income. You can Social Security. You can, Social Security payments. You can, oh my gosh, it's just so many different ways, right? Just alone with assets. You can take that asset, right? Let's say if you have $100,000 in the bank, well, a mortgage lender can be able to take that $100,000, divide it over a period of time, and say, okay, you qualify for this type of mortgage. You have P&L. So many different programs for you to acquire that property, right? And then depending on your credit score, if you want to know more about that, we kind of cover that the last 2 weeks, kind of the basics of real estate, okay? So I'm not going to go into that tonight. Another thing that I love about real estate is that, now this is a debate I hear all the time. I don't want to be tied to no one property. I want to be able to do what I want to do when I want to do it. Honey, you speaking to somebody that has moved and still own a home, have moved places, have rented out that property, have stayed in the property, and I do what I want, right? Essentially, but I still have a home to go to, right? Not saying a renter place is not a home. A home is where your heart is and your family, okay? But essentially, I have a house I can go to, right? And so with this house is I can do so many different things within this property, from being able to rent out a room. I can be able to refinance and be able to pull some of that equity that we just talked about, be able to tap into some of that equity and say, hey, I want to be able to have $50,000. Let me go ahead and pull that out because I need this money, right? I can be able to refinance again into a lower rate in 6 months to 12 months, right? So I'm not stuck with just one situation just because I purchased this home. I'm not always stuck in this home, right? I can always sell this home. I can always be able to sell it if I wanted to. So I know during the housing crisis, a lot of homes were undervalued. And so individuals were having to sell less than what the home was worth. And so what I would say to anybody, as I said before, location is very important. But the main thing about home ownership is that you don't want to be house poor. Okay, you don't want to buy a house and you can't furnish that house. You can't live in that house. You can't continue your lifestyle. That's one of the things that you do not. And I think that keeps a lot of people away, because nobody wants to be stuck, right, with this house, trying to figure it out. But the great thing about it, as I said, there's so many different ways that you can be able to get out of a situation or even improve your situation by having a home. Now, I do want to say this, okay? Buy what you can afford. I tell any clients that I have, at the end of the day, don't jeopardize the lifestyle that you enjoy just to get into a certain home. Look at what that looks like. And then what is those payments going to look like? Because even at its highest or its lowest, how is this going to hinder you or benefit you, right? Especially with an ARM product. With an ARM, it's a little different than a fixed interest rate, okay? An ARM is an adjustable rate mortgage, which means that your interest rate can go up or down depending on the market. So you got to be ready as a homeowner. First of all, you better have a plan, okay? Because them ARMs is nothing to play with, because your mortgage will shoot up if that is where the market is. But you got to understand where you lie in the equation. Because let's say you purchase a home and you love it, but then you consider yourself house poor because now you're trying to do things to figure out how you're going to pay for that home. That's how foreclosure comes in, right? Not saying anybody was irresponsible when it happened, but this is where money management, regardless whether you owning, renting, or investing, is going to be very important. You better know where your money is going and where it's coming. Okay? Why? Because you want to be able to structure your lifestyle and yourself in your future in a way that's going to continue to benefit you. You still want to be able to live the lifestyle you want to live. So what does that look like? And that just takes basic budgeting. If you don't know how to do that, then y'all let me know, because we can do a budgeting class, honey, because I can show you how to budget to save, spend, and you can do everything that you need to do on a budget. Trust me, I've done it. I do it. I love it. I do the things that I still want to do. I'm not missing out on anything. Okay. But it comes down to budgeting. All right. So with home ownership, another thing that you can be able to do, let's say you own a business, right? A lot of us, because of what happened with COVID, a lot of us, decided, hey, I'm going to start my own business from home. A lot of us are self-employed, or, we may have contractors that are employees, but essentially you may work from home. What the great thing about home ownership is you can be able to write off a portion of your mortgage payments, your light bill, your phone bill, the things in your home. We have a dog. That dog is really our part of our protection, right? So childcare is just so many, education, right? These are things that you can be able to put on your taxes in terms of having a home. A portion of that is going to be counted off. Now, talk to a tax professional. Don't be out here skimping and scamping, okay? Word to the wise. There's certain things as a lender we can add. I'm not a lender. I'm a loan originator, okay? But there's certain things that we can add back into your income to make sure you have enough income to qualify for your home. If you write off everything and that business hurts your income, then we take that into account. Okay, because that means that money is not there. So please know, on the back end, that's where that money management and budgeting comes in. It can hurt you in the long run if you're trying to take everything off so you ain't got to pay taxes. Let me tell you, my friend, taxes, they're going to be here till the day you die. Okay, so learn to manage it and your money as a whole so that you can be able to get into the home that you want to get into, or be able to refinance whenever you're ready. Okay. Another thing about home ownership. Oh, you can always, back to appreciation, right? What I love about ownership is that, let's say you don't want to, how can I say this? Because I don't want people to don't use this as a strategy to like get over, okay? But by law, if you own a home for a certain amount of time, and then you decide to sell that home within that time frame, and let's say a portion of it in capital gains wise was at a negative, or you didn't make the money back, expenses minus, what you made for that property profit wise, you can be able to count that off on your taxes as well. Okay. So for instance, you can, let's say you sold the home and your profit was 20,000, but you put 20,000 in and you came with zero. Well, you don't have to pay capital gains on it 20,000 because it evened itself out. Okay. If that makes any sense. If it doesn't, let me know. I will explain it. Okay. But the thing is, with the home ownership, you could be able to sell later for a higher price, or you could be able to rent it out. So let's talk about renting. A lot of where we stay now, I've noticed that there's a lot of corporate buyers coming into the market. If you see a lot of properties are getting scooped up and you seeing it's a lot of investors, well, sometimes those investors have backing. Sometimes those investors are a corporation or a business and they have a big line of credit and they're steadily acquiring properties, and you see rent rising. Well, it's called corporate buyers, right? They're coming in and they scooping up. Now, versus someone that you may rent an apartment or you may rent a home, right? But one of the things that you always see happening with rents is that each year kind of goes up a little more, a little more, a little more. Now, there are some markets that are capped, right? They can't just come in and start saying, hey, I'm going to raise the rent $5,000, right? There's caps in some markets. Some markets there aren't, and they can raise the rent as much as they want to because they have that ability to do that, right? So that's the power of home ownership or ownership, hey. But with renting, you may want to rent because you want to have the freedom to do as you please, right? Now, even though you're going to be tied into that lease for maybe a year, maybe 2 years or 3, I don't know. It's been a very long time since I rent. Usually with our renters, we do 1 to 2 years, or depending on the circumstance, after that is up, month to month, right? But usually 1 to 2 years. And our renters really ain't trying to leave even after 2 years, especially if you are, if you like in a great location. And I've seen renters in places for 10, 15 years. And these clients have come to refinance, and they're saying that these clients, the renters, feel like it's their property because they done pay so much in it, but they have so much equity in the home because the renters have been paying their mortgage payment for so long. And they can take that extra money and apply it to their principal so that they're able to have a lower monthly payment and be able to pay off their loan quicker, okay? And that is a strategy with home ownership. You can be able to pay your home off sooner, even though you might say, oh my God, I'm tied to this house for 30 years. No, you're not. You're not, okay? If you're not selling it, if you're not renting, honey, 30 years, don't worry about it. You ain't tied to it. There's a way and a strategy that you could be able to pay your home off in less time, right? You can take off 10 years, 11 years, 15, depending on how much you decide to put towards that principal balance. All right. So we're going to save that for another day, that type of strategy. But the thing is, renting allows for you to kind of have that ability to kind of move around when you want to, whatever area. But one of the things that I have seen with a renter that I know, their lease is up and rent is going up, right? And one of the things that I've noticed is that even with what some individuals are paying for rent is about the same as what you're going to pay for mortgage. And I'm looking like, I'm a little confused. I'm not even gonna lie, because I get the 30-year thing that might be holding you back, but you're paying the same amount of you would if you had a mortgage. But you having, I'm not gonna say your life is your benefit, okay? But for me, I'm team homes all day, okay? Team properties. I'm sorry, renters, but I will rent my own property. I'm joking with y'all, I'm joking. You may want to rent because you don't want to do, you don't want to keep the yard up outside, right? We have HOA, so they take care of that. You could be in a subdivision with HOA and you ain't got to worry about cutting your grass. We're in one of those, okay? You may like having a maintenance man, right? If something breaks, they got to fix it. That's a benefit of being a renter. If you're a homeowner, you got to pay for that yourself. Okay. Amenities, some subdivisions where homes are, they do have amenities, right? So but for renters, you may see more gyms, you may see them in more of a centralized area or in the city where things are in close proximity in terms of for renters. All right. And then your security deposit, right? You may have enough just to put down for a security deposit versus a down payment or a closing costs. And so really it's just where you are in your life and your situation and what works best for you. That renting may be the best thing for you now. Why? Because you may be trying to save up so you can purchase. All right. You may be wanting to purchase a home for yourself, or you want to be able to purchase an investment property. All right. So with investing, man, I love investing. I'm not even gonna lie. I love real estate. I geek out on numbers, real estate, business, and money. All right. If you want to talk any of those, let's talk. Because honey, I'm all for it. All for it. Okay. But when it comes to investing, I love it. Right. Investing allows for you to have ownership in a property and be able to take, just like home ownership, you're able to do appreciation and depreciation. Okay, man. Okay, some depreciation, we are allowed to add that back into as income. Okay. And the thing about investing is that you can start off, you can live in a home or be renting and invest, right? This is not a home that you're looking to live in usually. You're looking to either rent it out or fix and flip it, right? And there's so many other different ways that you can invest in, from wholesale, real estate investments, where you go in a deal with someone. You got trust, real estate investment trust, where you may pay some money in and receive money back, like dividends back from investing in a corporation, right? You can be able to partner with someone, and you may be able to offer a loan on a home to someone. You may be the seller financing a home. So many different ways to get into real estate investing. That you're not really tied to one thing. You can be able to invest in real estate with $0 down. You got to be very creative with your financing, but you can do it. Okay. Comes down to money management and being resourceful. But the thing about investing, as I said, you have the benefit of being able to take advantage of appreciation and depreciation. Right? So appreciation is, as I said before, the home value is continuing to rise and you're able to tap into that equity. Depreciation is taking advantage of the home devaluing over a certain amount of time, right? So I was watching this tax professional, okay, and I cannot wait to reach out to him and do a live with him. Oh my gosh, I cannot wait. I'm not going to speak their name yet, but it's coming. Trust me, it's coming. The post they put up today, I love it because, as I said, this is one of the strategies they said, okay? Don't take my word for it. Do your own research. Do not just go out here blindly and start doing stuff. You need the whole story, okay? The left, the right, and the truth, okay? So get it all. Don't just go out here listening to a 30-second clip and then you're going to run for it. Don't do that. Don't do that. You're going to be in a world of trouble. You're going to, hey, I don't want you losing no money. Okay. But one of the strategies they were saying is called segregation, depreciation. If I'm wrong, I will correct myself in the comments later. Okay. But you can be able to purchase a property. Let's say you work a W-2, a job. You purchase an investment property. You're able to depreciate everything that's in the home plus the home itself, right? As expenses. And that can allow for you to basically own that property tax-free for that first year. Okay, now, as I said, talk to a tax professional. I am not a tax professional, okay? Talk to one if you want to learn that type of strategy. I can help you get the home. I can help you fund it. But if you're talking about taxes, talk to a tax professional. That is not me. All right, so what I also love about investment properties is you can be able to, how can I say this? You can be able to use the rent from that home. So remember we talked about DSCR, debt service cost ratio, right? It's the cost of the of rent that you're gonna, charge for rent versus what is cost for the mortgage. Okay. You can use that potential rent or that current rent to be able to qualify as the income on that property. So therefore, your income is not used, right? Let's say you don't have no income. That would be a great strategy for you to be able to acquire a property, okay? So that's, in a nutshell, with investing. As I said, there's so many different ways that you can get into investing that in itself is its own episode, okay? But the thing is, I want to talk to you about how you can really still be able to build your portfolio, regardless if you want to take the ownership route, renting route, or investing route, okay? So if you want to start as a homeowner with building your real estate portfolio, the first thing that you want to do is, of course, own a home. You can be able to live in that home. And as you are living in that home, you can be fixing it up, and you can use the BRRRR method, which is buy, renovate, refinance, and then you can repeat it. Rent and then repeat, right? Or if you're living in a home, of course, you can't rent while you're living in it. But you can then be able to move out within a year, right? Because some programs require you to live in the home for at least a year, okay? At least a year. Because you're signing that we're not going to do mortgage fraud. Living at home, baby, because you say you're going to live in it now, okay? But you can live within that home. Make sure that you are within that home. And let's say in the next 2 years, you decide, okay, I'm going to rent out this home. Well, that renovation that you've done over the years plus appreciation, you can be able to refinance. You can do 2 ways of refinance. You ready to hear this? You can either refinance, okay, and just pull cash out as an investment property, or you could do a DSCR and pull cash out as an investment property. But if you're not living there, that's your option. Like, it's going to be an investment loan. If you are living there, then you could be able to pull that cash out as a primary residence and then be able to renovate again, or take that cash and go buy you a new property. So with your home ownership, you can either continue to live in the home and then rent out the space, or you can refinance and go purchase you another property. A couple of different ways, okay? And then even with a renter in there, you could be able to still refinance. So now you're getting cash flow plus cash out. Okay, buddy, telling you, this is a beautiful thing. And that's a home ownership route, right? You may want to live in the home for, let's say within those 5 years, for 2 years. All right. And then you decide you're going to sell your home. Now you can take those proceeds and you can either go buy a bigger home or an investment property and do a 1031 exchange. Okay. Another day, another conversation about that. Okay. But go look it up, 1031 exchange, on how you can be able to do that. Just Google it. You can find the basics of that. All right, so that's a way that you can be able to use home ownership as a way to get into investing. And so let's say you want to build $1 million portfolio. The first home may be 250,000. The next one that you purchase by pulling cash out, you go purchase another home. That home may be 500,000. The next home that you get, or the next two homes, can both be 250,000 from you pulling cash out of your $500,000 home. Now you own two more homes and you done built $1 million portfolio with four or five properties. Okay. Next, renting. So you want to build a real estate portfolio renting. There's a couple of things you can do here. If you are renting, you could be able to do rental arbitrage, where you go and find real estate properties and be able to lease those properties out and sublease them, or be able to short-term lease them to other individuals for that person to have people in that property. Okay. Using that way of rental arbitrage allows for you to really get into the investing game without doing it. Okay, without owning anything. Now you can take that cash that's coming in, that cash flow, and let's say you do that for the next 2 years. You can take that cash flow that's coming in. Let's say you want to do a bank statement loan, and you want to use that cash flow that's coming in, and you want to go and purchase your first investment property. This investment property may be a duplex, triplex, a quadruplex, which means 2, 3, 4 unit property. You can take that, be able to purchase that property. Now you're going to do your own rental arbitrage on on this particular multifamily unit. So now this multifamily unit, whether it's a duplex, triplex, quadruplex, okay, and you decide, okay, now I'm going to fix this property. I'm going to do the BRRRR method. I bought it. Now I'm going to rent it out. I'm going to refinance. I'm going to renovate it, refinance it, and pull me some cash out. You can take that and go buy you a 5-plex, a 10-plex, an 8-plex, right? So now you done created your own rental arbitrage with your own company. So you may still have those properties coming in, and now you have your own company that has its own rental properties because you've learned from those rental properties now what you would do in your own. And so now you may have anywhere from 8 to 16 units, and now you have a $1 million portfolio, and you're still cash flowing in heavy. Come on now, 6 figures coming in. So you can be able to use that, right? Because you understand what renters want. You understand how renters want to live. You understand whether renters want to be able to go purchase furniture or already have furniture in the home. You know that because you're renting, right? Use that to your advantage. Now, if you want to start out as an investor, okay, you want to either JV, which is joint venture, partner with someone that may have cash flow, or that where you guys can start a business or partner together, right? In a partnership. You may want to start with an investment in DSCR, but you want to have something that will allow for you to show liquidity, right? They want to show you have some skin in the game some way, or somebody has done something. Why? Because that's going to help you get a better rate and better terms from a commercial standpoint. All right. Start your business. Make sure you have it. LLC, S Corp, whatever that is. Talk to your tax professional. They can tell you which structure works best for you. All right. So let's say you want to start as an investor. You pull a friend and say, hey, friend. Hey, friend. Hey, friend. Do you want to start an investment group with me? Sure. Okay, well, let's get our other 3 friends. Okay, everybody start their LLCs because we all want to be, or whatever company structure that works for you, so we all can be protected, and let's partner together and start buying up some properties, right? So now because a business can own a business. So you may create this partnership entity where the 5 of y'all all own, what is that, 20% each into this property, and you all put in equal amounts and get equal back, right? So, hey, y'all may say, hey, let's start with fix and flips first. For every 3 flips that we do, we're gonna get 1 rental property, okay? So you flip 3 properties, and let's say you get $50,000 off those 3 properties, right? So now you have $150,000. You say, okay, well, let's go buy us a property that will allow for us to invest a portion of this so that we can be able to now have a cash flowing property. And you continue to do that. And let's say you did that every quarter. Well, then, my friend, you done flipped, excuse me, 12 properties, and you own 4 within a 12-month time span. And now you done built you, and let's say each of those properties are at least $250,000. You done built $1 million portfolio, right? A real estate portfolio. So the only reason why I'm saying this, in terms of whether you want to invest, rent, or own, you can be able to build the lifestyle that you want to build through real estate. You can be able to leave generational wealth through real estate. Let me tell you, I was doing my continuing ed classes, right? Because every year a loan originator has to do continuing ed classes. And the director of Fannie Mae came in and said, you guys, this is the prime time that if you are a millennial, hey, boo, if you are a millennial, all right, they are now becoming the peak age of home buying. But what's also happening is you got baby boomers that are really ready to downsize. And the thing is, even though this large cohorts of groups of each of these groups are ready to buy homes, we still have a 4 million housing shortage. So you can be able to start building homes and being a developer and really offering homes to individuals that need them, that are affordable, right? Because as I talked about earlier, appreciation is happening. Now, because the market and inflation is happening, the market is stabilizing itself, right? And some markets are going to go down in value, some are going to slow, and some are going to continue to rise over time. But the thing is that nobody's really trying to sell right now, right? And when they do, people are on it. Why? Because people are still buying houses. Don't let the interest rate fool you. Okay, don't let the news fool you. People are still out here buying houses and selling, but you got to be on it. You got to be proactive, and you got to really sit down. And I do this with my clients. I don't care if you want to just buy your first home, your forever home. I have clients that told me, girl, I want to hear that. I want a forever home. Don't talk about no other. I don't want to talk about it. I just want me a forever home. Give me the lowest rate I can get. And they were willing to buy down that rate to get whatever rate they wanted. Some people, they're forever home. I'm fine with that. I'll just pay off my mortgage. How can I pay it off as quickly as I can? Other people, hey, I need to pay off debt quickly because I need a better interest, better score so that I can go acquire properties and pay and have a good credit score so I can go and invest, right? So you got to understand where you are. Okay, you got to understand where you are. You really got to sit down and assess your situation. Because let me tell you something, if you're not willing to do that now, whether you're looking to invest and build something that's worthwhile, that's going to stand for a long time, you got to know the basics. You got to know budgeting. Hands down. I'm sorry, like, I know it ain't a sexy topic. I'm not going to go into it tonight. But you really got to know how to budget. Like, You got to be willing to do the things that's going to get you where you want to go to. Whatever that looks like. Okay? Whatever that looks like. So if you're not willing to do the basics to build $1 million portfolio, right, within whatever time span that is, or buy your forever home, if you're not willing to do these things now, it ain't going to change years from now. You got to be willing to do the work and decide what that is. So when I sit down with my clients, we go over, what are you looking to do 3 to 5 years from now? Is this your forever home? Are you looking to invest? Do you own a business? Are you looking to buy a business? Like all of these things, I want to know. I can't speak for nobody else, honey. Me, I want to know. Because for me, my fiduciary, okay, as a financial manager, when I was doing that then, I did fiduciary duties. I still hold to that now. Why? Because this money ain't nothing to play with. This is people's livelihood. You get what I'm saying? This is my livelihood, your livelihood. So why play around? We don't have time to play around. So we got to make decisions that are going to benefit us as we're doing it now and in the future. And there's a way to get where you need to get to, regardless of what your situation may look like now. So I know some of y'all probably going on Credit Karma, okay? If you are, if you go on Credit Karma, go and put that down there. Go ahead. Let me tell you. Ratings are different. Scores are different, okay? When you go buy a car, the credit report they pull is different from a mortgage credit report that's pulled, okay? So you will never know unless you go and make that next step forward. All right, there are down payment assistance programs out there. There's ways that you can be able to roll in your closing costs. There are ways that you can be able to bring little to nothing to the table. There are ways that if you want to put 20% down so that you don't have private mortgage insurance, then you put 20% down. That's you. But how can you after you get the home, right? So sometimes, hey, if you want to buy down the rate, buy down the rate. You know, we have rate buy downs. It's so much that you can be able to do. But if you're not willing to have that conversation, if you're not willing to really drill down and say, okay, this is where I am, and talk to a professional to find out what is the steps I need to take to get where I need to go, then you're going to be out here watching 30-second clips and still trying to figure it out. Don't do it, right? I'm telling you the basics. Regardless if you want to own, rent, or invest, sit down, look at your numbers, what money is going in, what money is going out. Okay? Where's your score now? It's going to vary. So if you do go on Credit Karma or Experian, it may vary 20 to 50% of that score that you see, whether higher or lower. Go lower for the negative, you know, the most what if horrible situation, go low, right? And then how much money do you have saved up? Then look at your resources. Do you have anybody that you could potentially partner with? Do you have a way that you can touch into some capital real quick? So these are some of the things that you want to look at. So, because if you're not sure where you are, then how are you going to know where you're going? I don't want that for you. I want you to win. It's not hard to build $1 million portfolio, a multi-million-dollar portfolio, whatever, $250,000, $500,000, whatever that number is for you. Like, it's not hard. But you got to be willing to do the work. Okay? So whether you want to own, rent, or invest, determine what that is. How much do you want to own? What is it that you want to own, right? And then make sure you know where you are. and then speak with a professional to see how they can be able to progress you if you're in position to be ready now. All right. So let me go over here. Make sure we're good. Because one thing is for sure, I want you to win, right? I want you to win. And so if you want to talk about it more, we can do that. Hi, Patience. Miss you too, boo. Miss you like crazy. Nah, but please inbox me. If you don't want to put it out here on live, it's okay. Inbox me, all right? So that you can be able to really, really get the juice that you need, okay? So inbox me. You don't have to put it publicly, and we can talk about it, all right? So until next time, we'll go more in depth next week on how to really build that portfolio. We're going to break it down. Next week, I'm going to share my screen so that we can start working some numbers and doing some things then so that you can be proactive in building your $1 million portfolio. All right, beautiful boss. Make sure that you inbox me if you need any help, but make sure you slay every day with style. All right, see you next week.